All right. In regard to a question that I had received today, I'm probably not going to look at chat too much, but I did want to do it live just in case I decide to at the end. But somebody had asked in a conversation on X earlier today, what happens to Bitcoin in a recession if rates start coming down and if we're just in a real recessionary environment? And it got me thinking about that. And it was a really good question. And I've kind of always just said, oh, it's going to do well. And I've given some justification for it, but I think I've got a pretty good idea of why it can do so well. And I wanted to cover that. So first, I wanted to look at this image here. So you can see the Fed funds effective rate. This has been going around a lot. A lot of people posting this. Talks about how the majority of the decline in these bear markets occurred after the Fed's pivot. So basically saying we should be scared of the Fed pivot. That's the gist of it, right? I pointed out in a post that it's not always right, though, because there's times like in the mid 80s where we pivoted, where you can see where I'm hovering. Well, maybe you can't see with the mouse, but look down at the mid 80s section here, and you'll see that we pivoted and the stock market went up. And then in the late 80s, we did it again and the stock market went up. And then we raised rates and the stock market went up. And then we started to pivot a little bit lower in the mid 90s. And into the latter part of the 90s, we lowered and it continued to go up. So I think it's safe to say that the Fed pivoting isn't a deciding factor about whether or not we have this steep recession and decline and the markets crash. But not just that. There's another point that I wanted to get across in regard to the timeline here. So maybe when the Fed pivots, if the argument I've been making for a while now, unemployment doesn't go up, which I don't think it will. If the unemployment doesn't go up and start to get to crazy levels, then we don't have this crazy downward spiral where everything starts falling apart, where people lose jobs, and then when they lose jobs, they spend less, and when they spend less, other people lose jobs. And then it's just this downward spiral that Ray Dalio likes to talk about. If that doesn't happen, then we can continue to go up. But let's say that for some reason it did happen. What happened in 2008 after the recession started to kick in? It was a doozy. I mean, we had to spray in tons of global liquidity. And just in the United States, we did like $870 billion of an injection. Nowadays, that's nothing. But back then, it was a lot of money. And we did that just to boost the economy and get it back going again. But what I wanted to look at is a couple of things. First off, the recession started to occur in late 2007. That's when we started to see a decline in the markets. I'll show you that in a second. But something else happened around that time that is fascinating. It's almost like the government was trying to create a lifeboat for the rich. Because on March 28th of 2000, oh, I'm sorry, I got the wrong one here. In March 2007, after delays in obtaining regulatory approval. Well, this might not be the best part of the example. I'm moving on. Skip it that for now. Here's what I wanted to show you. The gold ETF, I believe, let me make sure I got the right time frames here, because if I F this up. Oh, I totally have the wrong year. Gold ETF. In March 2007, after delays in obtaining the first gold ETF. Okay, so yeah, it was 2007. It looks like the gold ETF was created. So I'm right about that. I'm wrong about the timeline. So ignore this line right here. But in 2007, the gold ETF was created. The price of gold, and I'll have to update this and move it around. The price of gold went up afterwards substantially. But what's interesting is if we look at the recession around that time, and we look at the performance of gold, and this is just the S&P. If we look at the performance of gold in regard to the S&P, and the S&P is the colored line down here, the gold one is gold, you could see that when October hit and the S&P started going down, gold continued to ramp. Now, it did retrace slightly during this time into October of 2008. But look what happened with the regular markets. And I'll show you this with a couple of other indices too. The small caps and also the tech market in the NASDAQ. They continued to go down and gold went up. And it continued to go up. And it outperformed dramatically all the way out to August 11th on the S&P, where the S&P hadn't even made new all-time highs yet. at this time. It took them all the way until February of 2013, right around this time, to start to make new all-time highs. So that's the thing everybody's scared about, right? And sorry, I've kind of fumbled the ball on this one. Thought I had it. Anyway, but that's what everybody's afraid of. They're afraid of we're in 2008 and the market's going to collapse and it will take 4 or 5 years just to get back to where we were. That wouldn't be ideal. Here's my argument. Just like the lifeboat that was created and implemented after regulatory delay in 2007 for gold, the gold ETF, I think the Bitcoin ETF is that this time. And look at these outsized gains. If we hover over here, we're looking at 196% return from the start of 2008 to this point. And so, like, what is this? August 2011. So over the course of 3 years, gold did well. And gold has a much smaller multiplier for its potential versus Bitcoin. Bitcoin has like a third the inflation rate, or will in April. It'll have about a third the inflation rate of what gold does, maybe up to 40%. And so we're going to be looking at higher demand, the FASB accounting rules, the halving kicking in, reducing the inflation rate. We're looking at all these things, the Bitcoin ETFs being available, that lines up with kind of this gold thesis from what happened in 2008. And I would say that even worst case scenario, in a recession, we're going to see Bitcoin outperform the regular indices. And you could see it in the S&P. You could see it over here, and I got to move this. It's in the wrong place. But you can see it over here. I'll unlock this real quick. Sorry, I fumbled up the dates here. But you could see where right at the beginning of kind of the recession, we had gold, and gold on the compared to the Russell. Look at the outperformance, roughly a 200% gain. Russell, over that same time frame, down 13%. And then we have some added benefits this time too, not just the fact that this looks similar in regard to the gold ETF and the Bitcoin ETF timing, which is just perfectly right before major fears, right? But at the same time, we have an environment now where the government and their bonds aren't as reliable as they've been in the past. And what I mean by that is our percentage of debt is just extraordinary compared to 2008. Again, a little over 875 billion. We were able to save the entire financial system of the world and reboot everything, and at least start heading in the right direction slowly, and keep banks from failing. Like that was, but nowadays that is like a round of checks from the government. We spend so much per year. It's absolutely insane. And so we have an inflation rate in the money that's much higher than it was in 2008, on top of all these other things that can stimulate Bitcoin and make it go up a lot. And so when I look at, and just the reliability of the governments, I mean, do you feel as comfortable with putting your money in government bonds now? Do you? After the last 4 years of money printing, can you honestly say, yeah, I feel really good about our government situation financially, and I'm not concerned about it, and I would totally be fine buying bonds? I mean, we're the cleanest shirt in the dirty laundry here in the USA. There's countries like China that could be 2 to 3 times more indebted, and but most developed nations have this problem with the money print and growing burr. So we have the Bitcoin ETFs. We have this historical reference to what happened with gold in the ETFs around the time of 2008, showing how much better they performed. Even though there was a dip, again, you can see a dip here. It's nothing compared to that. And then it was just straight up. So I guess what I'm trying to get to here, and I should have thought through a little bit more, is that if we have a legitimate recession, we're likely to stimulate a ton. And while we're stimulating, we have a Bitcoin ETF that will act like a multitude of what gold did back then, because gold was a bigger asset class. And we have, I mean, again, just all the different levers between corporations being able to put this stuff on their balance sheets, boomers being able to buy this in mass and having much more wealth than they had back then. And it just everything is lining up for Bitcoin to be, I think, a really good recessionary hedge when you look back at what gold was able to do. So like, I think it's a much better version of gold in just about every way, from how you custody it to how you move it to how much it costs you to move it to its inflation rate, everything. And yet the setup for government economies around the world is worse and more inflationary in regard to money supply. So I just wanted to show you this reference showing what happened with the gold ETF, showing how the price escalated afterwards, and then comparing that to market performance. And again, we can look at the NASDAQ. It was about the same. I'll move this over to the appropriate time frame. But again, you can see this upward drift and how it performed, and it's just not the same. Like even the NASDAQ, even the tech would probably do better this time. Lots more money, lots of levers for tech to pull. This is kind of a more difficult one to look at and compare. They would probably be up a lot higher, I think, compared to other companies like small caps and stuff like that. But again, I think Bitcoin is going to be a lifeline it hasn't been in the past, and better than what gold was in the past. And that's the gist of what I wanted to say. I just wanted to go over that, make reference to it, and then show you some charts on it. That's pretty much all I got. I'm not going to do